Welcome to our session on the economy, the Perth property market, and where you might find today's best buying opportunity. Most of you have heard me before or seen me before. Very quick background on myself there. I won't go through every bullet point, but suffice to say that I've had a long period of experience in the Australian market, having lived here for about 42 years, but have been in the property market buying and selling for quite a number of years, and a lot of experience in the banking world and in the different industry committees that hopefully will help me give you some insights on where I think the property market is going and certainly where the economy is going. Okay. Everyone can see the screen, hopefully.
Yep.
So the key thing with Australian real estate is it underpins the Australia's wealth. And some of you may have seen this slide before, but this asset class, which is called residential real estate, makes up a significant portion of investments in Australia. Okay, so 10.7 trillion compared to our total superannuation, which is 3.9 trillion, and the stock market is only 3.1 trillion. So if you're not in the real estate market in Australia, then you are certainly not diversifying your portfolio in the right place. So you can't be totally in listed stocks. You've got to be in the property market, in the residential real estate market, because that is one asset class that will keep going up in value. And that has been proven for the last 42 years I've been here, but it has been proven for many, many years before that as well. Okay. The important figure here, I would say, is if you look at the actual outstanding mortgage debt, it's 2.3 trillion compared to the actual residential real estate amount there is 10.7 trillion. So our debt actually is quite a small part of the total assets valuation. So there is a lot of people in Australia who have paid off their mortgages, or if they've only got a very small amount of mortgage, which is another important factor when you're looking at the increases in interest rates and so on. You need to realize that that is not actually impacting everybody in the Australian market, property market. This slide is very important because I use this slide quite a lot and have been using it for at least the last 7 or 8 years and amended it slightly. But the important thing here is what makes the property market move. Okay, so I've got my top 7 in some sort of an order there in terms of what makes the Australian property market move. First one there is supply versus demand. Just like every commodity, if you've got too much supply, not enough demand, prices go down, and vice versa. At the moment, you all know the last few years, supply has been low and demand has been high. And we'll talk more about that shortly. Second one there is interest rate and affordability. Yes, interest rates have gone up. It's at a stage now where, we've had a lot of steep increases, but we probably think it's peaked now. And the next move is probably going to be a fall in interest rates. We'll talk more about that shortly. But that is an important factor because that drives affordability. And you saw when rates went down to, 2% or with a 2 in front of it, then you saw that property prices did increase quite a lot. So that is the second most important factor. But the first factor, keep in mind, is still supply and demand. Okay. Third one there is the regulator. The regulator is very important because they've got a lot of levers to pull when it comes to looking at lending policy by banks, when it comes to fiscal policy, other policies that are determined by the government. But most importantly, I think APRA being the main regulator of banks and the banks being the main factor in terms of the lending, that part of it needs to be healthy. If banks stop lending, the property market will be doomed. So we need to make sure that that is healthy and reasonable. Okay. At the moment, we all know that there is a 3% buffer when the bank is looking at your ability to repay your loan. And as interest rates increase, when we've got a monetary policy where interest rates are actually getting tightened, then in that sort of scenario, it's not unreasonable to have the buffer at 3%. But when interest rates start to fall, one would expect that APRA may actually look at bringing that back down to 2%. So if that happens, then you've got a double benefit. One, the interest rates coming down, two, the buffer is coming down. So just like you saw when interest rates were going up and the buffer went up to 3%, that caused a negative impact, and this could be a positive impact, but time will tell. Fourth one there is very important because you need a healthy economy for property prices to grow. In particular, you need unemployment to be in a healthy place, and you need the GDP. You need the economy to keep growing. The economy goes negative, sentiment goes down, unemployment goes up, people can't get a job. Of course, they can't make their repayments. And so these two are probably the two key economic factors that we need to look at. And the government has done a great job, number 5 there, in terms of giving sufficient incentives, building a lot of infrastructure post-COVID. And there's significant government spending that keeps the GDP up, keeps people employed. So unemployment across the pitch has been very, very healthy. And we'll look at that in a minute in more detail. The sixth one there is the delinquencies, okay? Delinquencies is a word that banks use quite readily, and it is related to loan write-offs. And we're talking here about residential mortgage write-offs, okay? Now, when you don't pay your loan for 1 or 2 or 3 months, then that's when your loan becomes delinquent. And banks' delinquency rates, I can tell you, is still at very, very, very low rates. So when I say very low rates, it is lower right now than what it was pre-COVID. In other words, we have nothing to be concerned about with all of these interest rate increases and the scaremongering by the media about people will not be able to pay off their mortgages and so on. I'm not saying there is no pain in them in the market. There is definitely pain, but the delinquency rates have been at low, very low rates consistently over the last, I can go back 15, 20 years. Okay. That hasn't gone up at all. So you're not seeing mortgagee in possession sales. And even if you saw mortgage in possession sales in certain isolated incidences, you will find that there would be plenty of people at auction looking for bargains and actually picking up the property at market value. So you're not going to see that figure actually go up in the near future. Why is that figure so important? And you see quite a few Northern Hemisphere economists keep coming out and saying Australian property market is overvalued, and you will see huge corrections coming up in the Australian property market, talking about 10%, 20%, some even talking about 30, 40, 50%, okay? Those Northern Hemisphere economists mostly come from investment banks or big equity houses, and they have not got a clue about the Australian property market. For property prices to fall, right, you need, firstly, unemployment to spike up. And when I say spike up, I'm talking about unemployment needs to go up above 7% for us to be in some sort of a problematic space. And GDP probably needs, you need to have a recession. You need to have a few negative quarters. At the moment, unemployment is at 4.35. So basically 3.5 is where we ended up as the lowest point. And at that point, really, you have very little to worry about because you're almost at full employment. So if people can get jobs, if people can get second jobs, there is no way you're going to have loan write-offs and delinquencies. So like I said, it's not an area of concern. And even though when it goes up a tiny bit, you start seeing headlines, and that's scaremongering again. The last factor, very important, but I won't dwell on it. It's just that our, all of these factors do have a play on mostly either directly or indirectly but mostly indirectly, because it was half of the external factors like oil prices and so on that caused inflation to go up. Inflation then going up meant interest rates went up, meant affordability came down. So all of these have knock-on effects. If FX rates, if our Australian currency is weak, it brings more investors from overseas into the Australian economy because their dollar can actually buy more here. Okay. These factors, if equity markets are strong offshore and equity markets become stronger here, people feel more wealthy and they may invest more into property. All of these factors, like I said, have a play. Now, quick recap on key data. On the left, there are the negatives for property. On the right here are positives for property. So firstly, on the left, very quickly, UK has started to cut rates. Okay. US Fed will start to cut rates next week. So we will more than likely see a cut in the US rates by 0.25% next week. That is pretty much the whole market is predicting that. I have been saying that for about 3 months now, but everything seems to be lined up so that that would happen. US inflation has come down and it peaked at 9.1. Australian inflation is looking around that 3.5. We need that to be closer to 3. Our peak was 7.9. And of course, UK inflation is having a stellar performance at the moment, which is great. However, you still have got recessionary fears in the US, in the UK, and in Europe, and we are very closely monitoring the slowdown in China. Okay, particularly when it comes to property, China has got a severe oversupply, and you find some of the minerals prices recently have come off as well because of the lower demand from China. So we need to watch that very, very closely. Okay, on the right side here, we still have a national rental crisis. Okay. And that might continue to get worse before it actually gets better, even though you've seen some signs of slight improvements in certain sectors, but we still have a long way to go to solve our housing crisis. And I won't dwell on unemployment. I've talked about that. Migration, you've got migration. We can't stop migration. Okay. A lot of people ask me, well, why can't we just stop the migration? Well, firstly, we got labor shortages. And every day we talk about labor shortages. We need more people in aged care. We need more people to build houses. So it's a catch-22. You stop the migration and you don't have enough resources to do what you need to do in Australia. The second reason is we have an aging population, and more than 300,000 people are going into pension mode every year. So the government needs money to actually pay the pension. And what they need is more young people coming here, working and paying taxes so that you can actually pay that. So that's not going to solve, nothing will be solved if you stop migration. Okay. Australia's GDP, so March quarter, sorry, I haven't updated this slide, but the June quarter figures just come out, and we'll see the numbers in a minute, but it's only a 0.2% growth. Okay, cash rate. So everybody knows what a cash rate is now. It's the overnight cash rate, OCR, as the Reserve Bank refers to it. We've had since January 1990, so in that long period, we've seen 4 increases before this current one. So there's one here, there's one there, there's one long period there, there's one over there. And then, of course, the more blown up version here, you've got there's this steep rise here to 4.35 now. Okay. Where do we want the cash rate to be? We want it to be between 2 and 3. That's where the RBA wants. Okay, want to be. But inflation needs to come down for that. What's the average cash rate over this long period here? Okay, we're talking very long period here. 5%. So the average over this long period has been, since 1990, has been 5%. So we are making a lot of noise at 4.35. Yes, it was at 17.5%, and I have paid 17.5% mortgage when I bought my first property in Australia. So why are we making so much noise when the interest rate is about 6.5 and the cash rate is about 4.35? Well, it is because of this very, very steep increase that we've had. And we got used to the low rates that we were paying, and a lot of loans got written when cash rates were very low, and the mortgage rates were about 2.5%. But moving on, the Australian GDP growth, I said I'll talk about that. So listen, the latest number is 0.2. We are on a per capita basis at minus 1.3. Household savings to income ratio keeps falling. So people's savings are getting depleted. Okay. And it is causing pain. It is causing pain for people with the sharp increases we have had in the interest rate. And so this is, I was expecting in June that we might be closer to zero, and maybe even get a minus 0.1. But as usual, the government spending and the migration are two things that keeping this figure to be positive. But these numbers here shows that the economy is really, really slowing down. There's nothing to write home about. And RBA needs to see probably this same trend and lots of other things before they actually drop interest rates. Okay, this is the other big factor, the inflation. So inflation is, I haven't again updated, but the inflation has come down a little bit. Okay, it's at, as I said, it's around 3.5 now, but it's 3.5. Okay, we're tracking in the right direction, but it's still not enough. We need to get to 3. RBA wants to see something 3 or 2.9 would be amazing. And with the GDP as poor as it is, together with hopefully retail sales comes off a bit, you need 3 or 4 things to really align before the RBA is convinced that we can actually drop interest rates. RBA governor has been very upfront in saying that don't expect anything before Christmas. And that's the reason why. This is the main reason why. Inflation is still stubbornly high, but we do expect it to fall. One of the big factors is this tobacco. So please, guys, please stop buying tobacco and stop smoking. But the other one is fuel. So this forms a big part. Okay, this forms a big part of our inflation. Insurance and rent. Rent is slowing down in terms of the pace of increase, so that's a good thing. Fuel prices, you saw crude oil prices. You want to see crude oil prices sort of come down. For a very long time, it stayed above sort of $80 US a barrel. Last week, it dropped below $70. It was around that $69 a barrel. Okay, that is a very, very good sign. And you would expect with that sort of price that the price at the Bowser might well get to $1.50 in the very near future, unless something spikes it up again. So we need that. We need a combination of factors. We need a combination of factors for the inflation to come below 3. But we all got to cross our fingers and toes and make sure that, say, listen, interest rates going up has not caused sufficient pain for retail sales to come down, and retail sales is still humming along as though nothing's happened, and people are still spending quite a lot of money. So we need that to happen as well. Okay. This is important. Unemployment rate, like I said before, pre-COVID, we were about 5%. This is pre-COVID, 18, 19. Okay, this is pre-COVID. Post-COVID, you'd think there'd be a lot more pain in the economy, but we're doing very well. Okay, it came down to 3.5, as I said. It's now sort of ticked up here. It's ticked up here to about 4.35 now, the latest figure that came out last week. So we are in a very good position when it comes to unemployment, and that's healthy for the property market. Where we want unemployment to be, we want it to go up a little bit more. We want it to edge towards 5, so that the RBA governor is convinced that there is more pain in the economy and we need to do something about interest rates. So we need a few of these numbers to line up before the RBA governor will do something. However, if US falls next week and there is a second fall within the next 2 months, the pressure will be on the RBA to start dropping very shortly after that. Because if you're going to get 2 or 3 declines in the US and nothing happens here, our currency is going to move up. And we can't have a currency that is too strong because it doesn't help our exports. Okay. Only helps the importers. So we need to have the right balance. And more than likely, the pendulum will swing towards a sooner rather than later interest rate cut. My prediction is you will not see it before Christmas. I've been saying this for a few months. So it's not because of last week's comments by the governor, but I do expect that in the February meeting that you're going to see the first drop in the interest rate. Okay, a 0.25% drop. Now, before I go to the next slide, so just so everybody understands, the cash rate determines the variable interest rate, not the fixed interest rate. The fixed interest rate is a component of more forward-looking, and it is derived by the bank's money market areas. And what they do is they derive what's called a yield curve, and the yield curve is derived through a number of different instruments. First, we call it the 90-day bank bill futures. And secondly, they use a thing called interest rate swaps and the bond rates. And all of these 3 actually components are used to build a yield curve on the fixed rate side. Well, I can share with you that the fixed rates have now gone down. So you've probably all heard in the last 2 or 3 weeks that all banks have reduced their fixed rates by 0.6% to somewhere around that 6% mark or 5.99. Please do not go and fix your interest rates now, because when the first drop in interest rate happens in, let's say it is February and I'm correct, then you are going to see the fixed rates fall almost 1%, okay, from where they are now. That is what's going to fuel the property prices, okay? That's the bigger game changer. We all remember at COVID time, 1.89, I saw an fixed interest rate at 1.89 for 3 or 4 years. And so when variable rates were still at about 2.75. Fixed rates fall faster, much faster than variable rates. If you are thinking of fixing, please wait until about May or June next year. Do not rush off and fix because you just seen a 60 basis point fall, okay? Otherwise, you'll be stuck with these high rates, and everybody else who's fixing mid next year will be enjoying with something with a 4 in front of it. So persevere with the higher rates for a little while longer, bear the pain a little bit more, but things are going to get better next year. Now, I said supply and demand, number one, and that is what's causing the property prices to be up on the backdrop of a steep increase in interest rates over the last 18 months. So where is the demand actually coming from? Okay, so I won't go through all of these bullet points, but you can see that there's a lot of overseas interest in Australian properties. But generally, there's a supply and demand game that changes the equation very, very rapidly. And that's why I never thought property prices will fall. In the 5 interest rate increases that I showed you over the last 30 years, in each of those times, property prices did not fall, okay? Property prices don't necessarily fall when interest rates increase. And media tells you something else, and that's why the media and a lot of economists predicted that property prices will fall. And they've been saying it for the last 2 years. We forget about the Northern Hemisphere countries because we don't pay any more attention to them. I've been listening to them for 40 years and they've never been correct once. But the important thing is the demand for properties will keep coming for this reason, okay? Migration, yes, we peaked here and it will taper off. Of course, it will taper off over the next couple of years. However, it'll still remain high. While it remains high, So we saw this happen. So when this happened, our border was shut. Okay, nobody's coming in, people are moving out, students going home, etc. So when that happens, that's what caused the big issues we had with property, because we stopped building as well. And when you stop building and the demand suddenly comes to peak again, then it's not rocket science for you to say, well, you stop building and then the demand came and it's like a tsunami effect, then you're going to have a crisis in property. That's what happens. So we got a lot of Japanese investment coming in, Chinese investment coming in. More two reasons, okay? Two reasons why Japanese and Chinese interests are coming in. China don't believe in the property market anymore. There's a flood of properties there, a lot of empty properties there. So they're bringing their money and investing here. Japanese, they don't make any money. Their population is not growing. The population is going backwards. And they don't take migrants unless you are Japanese. So their population is actually declining. There's 100,000 properties in Japan that are empty. So for them to, and the negative interest rates are negative. So you can't invest money. Where do you invest money if you're in Japan? If you want to make some money. If you do a fixed deposit for 1 year in the bank, you get 0.2% interest. So they are the big Japanese companies who've got plenty and plenty of money. They've got billions and billions of dollars. They are looking at other places to invest. And there is going to be a significant surge in more investments coming from Japan and indeed from Europe as well. Okay. So millionaires, a lot of more millionaires are from around the world. This blue is where they're going and red is where they're exiting. So we are also a beneficiary of a lot of migration, high net worth people who are coming and buying properties here and moving here indeed. So we've been a beneficiary of that as well. Australia and UAE are sort of leaders. There's more people going to the US as well now, but they may be a bit more subdued until the elections are over. But a big beneficiary is Australia, okay? And then students. Anybody want to guess how many students are in Australia? 609,000, which is a massive amount of students for the size of our population. This is where they come from. China, India, Nepal, Colombia, Philippines, they're the big ones, okay? Biggest ones are China, India, and Nepal. And then this is where they're going. So the biggest recipient has been New South Wales, and then Victoria and Queensland, and so on. So it's certainly a game changer with the demand on the rental side. And with rentals, then come investors, and rent increases, then property price increases. So it all has a part to play in terms of moving the needle on property prices. So this one is the significant supply issue when you look at the demand and supply, okay? So at the moment, we're about here. So what we're looking at is the population change yes, it will plateau. It will plateau. It might actually come down a bit. But the demand, this graph here is actually going down. The property completions are coming down. It's not actually helping. So this gap here is what we're talking about. We need the completions to start tracking up so that it goes and meets the demand. But that's not going to happen in the very near future. So there are a few supply constraints that I want to point out to you. It's not just about, just the numbers, but what's causing the numbers to be low. Cost of construction is becoming a big deterrent for developers, mostly apartment developers. You could develop a 2-bedroom apartment pre-COVID for around 240 to 250,000. This is the cost to the developer to build one. Now it's 400,000 and upwards. Okay. So if you look at the percentage terms, 250 to 400, it is massive increase. So for them to develop something in a 30 kilometers away from the city, they need to think twice because they're not going to get the right price for it. So you might actually see, because of the cost of construction, there may be a lot more construction happening in more areas where the apartment price is a lot higher rather than lower. Large delays in project completion. So we work with some of the large developers in Australia, like Daycorp, Malfa. I mean, the list goes on, okay? You find a lot of projects are getting delayed by at least 12 to 18 months. That's because there's not enough materials, labor, and cost is biting as well. So there's a lot of issues in the completions. Essential services lacking. I know this is a issue not just in Sydney, but this is an issue everywhere. You need the services to be able to develop more land, and that infrastructure is not coming fast enough. There's also lack of developable land. Flooding being an issue, other things being an issue, councils red tape being an issue. There's a whole list of reasons why this supply is dwindling, and fewer building companies in the market. So it's well documented how many companies builders have actually gone under over the last 2-3 years. So all of these are contributing to the supply constraints. Now this is interesting. Dwellings approved. So we sort of peaked here, and then post-COVID, it's just been coming down. And these were all the supply constraint issues we've had, and you can see different graphs coming down. There's a slight, sorry, I just cut off here, but there's a slight uptick in the last couple of months, and we need to see a much bigger uptick than that if we are going to see more supply come down the chain. But at the numbers that there are at the moment, it is not a good story coupled with everything else I've just talked about. So my observations, a few observations generally for supply, is that supply is going to lag demand for at least the next 5 to 10 years. It's not something that can be resolved overnight. Okay, there's going to be a lot of things that need to be fixed because demand is going to continue. Supply will slowly catch up, but it'll take a long time. Rental crisis will likely worsen. Okay, we could see even more rental increases at a lower pace, but the rental prices will increase because of that supply demand issue is not going to go away. Third one there is the cost of construction. And the fourth one there, listen, this is an observation. The gap between house and apartment prices will close further in the next 24 months. It has to. It's where affordability is going to be. So house prices in a lot of suburbs, in a lot of cities, is actually increasing constantly. So people have no option but to maybe start with an apartment, and so you'll see apartments perhaps a bit more in vogue. And because of the lower supply that's going to come there, you'd expect that the prices will go up. Okay, so where have the properties increased most in the last 12 months? Perth is obviously the winner, okay, 23.6%, and Adelaide and Brisbane very close, second to Perth. So the reason for it, primary reason, is supply versus demand, okay? There is no other reason. It's supply versus demand. Keep going. Vacancy rates. Listen, the national rate is at 1%. I haven't refreshed this, but this hasn't changed. This hasn't changed for quite a while, okay? You've got chronic levels in Perth. You've got chronic levels in Adelaide, and a slight improvement in Brisbane, but there's no reason why it can't go backwards again because they've got a major supply constraint as well. Now, Perth, moving on to Perth. So what is causing, what are the key things in Perth that are causing property prices to go up in that sort of magnitude that we just saw? Why is it so different to the rest of Australia in the last 12 months and maybe 24 months? And why will this continue? Okay. You all probably know that the hottest property market in Australia at the moment is Perth. So firstly, it is to do with trade and their location. Okay. I won't dwell on these slides in the interest of time. I'll go rather quickly. Perth used to be known for its mining, and they contribute significantly to our GDP. But Perth has diversified significantly into agriculture, into manufacturing, and into tourism. And it has, because of the property prices there being on the lower side, they were the second lowest property price a year ago after Darwin. Okay. And now they are certainly punching above their weight and are on par nearly with Melbourne. So what's causing this is the population growth and jobs and migration. Okay. Migration also from interstate as well. So again, I won't dwell on these numbers, but just to give you some idea, I mean, the Western Australian economy, because of the very large mining companies that operate there and the large amount of minerals and resources that we export, you can see the economic growth here. When I look at sort of, these are some old numbers, but Western Australia is like their GDP growth is bigger than some of these countries. Okay. As I said, so how much do they contribute to our economy? $210 billion directly to the Australian economy, employs 149,000 people, has a pipeline of over $440 billion of major projects. These are big numbers, very, very big numbers. Okay. Like I said, there's a number of industries that you can see the graphs actually going up everywhere, but there's a number of industries that is causing the Perth economy to grow. It is not a single industry as in mining anymore. So they used to be called the boom and bust city, but that is definitely no longer the case. Okay. Now, Perth also has spent a lot on infrastructure recently, and the MetroNet rail project, which is a $6 billion project, which goes all the way up to Yanchep here and comes all the way down here to Mandurah, connects the city, Perth in the middle here, a lot of coastal suburbs, obviously. And that infrastructure is having sort of people moving more north and more south, and those areas are where there is land. There's not a lot of land going inland. Okay, you've got to either go up or you've got to go down if you don't know Perth too well. That infrastructure is certainly helping. So demand for property has surged in Perth caused by population growth. Supply is still very low, and you can read the numbers there. It is staggering to see some of these numbers. If you have a house for sale in Perth, it is normally sold within 13 days. Vacancy rates are still at crisis point, even though we saw the numbers, they had gone as far low as 0.3% vacancy. It's slightly up now. But the predictions have been correct. I mean, if you look at this prediction here, only way is up. Perth house prices tipped to new highs in 2024. Sarah Brooks, 2023, more than a year ago, absolutely spot on. Absolutely spot on. And nothing has changed. These predictions are still the same. Okay. So Perth is set to be one of Australia's fastest growing cities over the next decade. Population grew by 19.6% in that period. Okay, so these are big numbers. So in terms of population growth percentage wise, they are the largest, if not the second largest in the last few years. So their population is going to get to 2.5 by 2030, 2.93 by 2040, and 3.358 by 2050. So if nothing else happens in Perth, just the population growth is going to mean that there's going to be a huge positive impact on the value of properties. Okay. So a few checklists here. For property, wherever you buy a property, you've got to do this kind of checklist. We do this in Nivas all the time. And so at the moment for Perth, basically, depending on where you are looking, but certainly where we are selling, all of these boxes are getting ticked. So it is a hot property market where the supply is significantly dwindling and the demand is increasing. So there are a lot of stories of new land subdivisions coming out, like 50 lots, and there's more than 1,000 people registered to buy them. These stories are all over Perth. Okay. Just a quick comparison here, median dwelling value. Okay, so again, I won't go through all these numbers, and you've seen them before, but the important thing is that there is a lot of room for Perth to catch up with Sydney. Okay, a lot of room. And where you've got prices, so we started selling in Perth more than a year ago, and all of the people we sold to, they're sitting on very healthy profits already. But even at the prices that they're selling now and the scarcity of the properties, you are going to see more and more increases in property prices. I will stop there. I'll pause there and I'll pass it over to Krish, my colleague, who
Good
will
evening,
talk
everyone.
about the opportunities and tell you a bit more about what's happening in the property market there. Thank you.
Perfect. Thanks, Sachin. Good evening, everyone. My name's Chris from the Nivas sales team. Hope you're all well. Now, today, I'm not going to be showing you a whole bunch of house and land packages and saying this is, what we've got in stock and that sort of thing. I'm going to give you a very high level overview about who we work with in Perth, how we source land, and how we can, I guess, source a property for you, be it investment or perhaps even a home to live in. So just to start off, the first builder that I want to discuss is called Content Living. Now, these particular builders have been around for many years. They are cashed up, they're very well financed, and they build an amazing product. So this particular builder, to give you an idea, this is just one example of sort of what they offer by way of inclusions and things like that. So 900 mil, appliances, fully ducted reverse cycle air conditioning. So in a nutshell, they're a very good, well-finished product. And I guess as Sachin was mentioning, what we are doing now is we are having discussions with our clients about what their goals are, what their objectives are, budgets, that sort of thing. Then once we've had that discussion, we're going and talking to our builders, like Content Living, for example. We're talking to our land developers and basically packaging up homes for our clients, right? Now, as Sachin mentioned, the demand has been significant and sourcing land in places like Perth is becoming quite hard. Anybody who has bought a property there in the last 12 months, which is a house and land, would know that land registrations are now pushing out 6, 9, even some up to 12 months, right? That's just simply because they cannot keep up with the demand. And this has been driven, as Sachin mentioned, by the population increase and a severe lack of dwelling approvals in the state as well, right? So they can't keep up with the demand is what it is. So in the past, as Sachin mentioned, it's been mining, taking it sort of up and down, but now it is purely supply and demand. One other thing I'd like to make mention is that the Perth market is actually considers itself a regional city. Now, what that means is any people coming from overseas who are coming on a regional visa, right? Instead of going to Dubbo or Orange or somewhere random like that, they're going to go to an actual major city because Perth is now regional, right? So Adelaide's done the same thing too. So this is what is also driving their growth. What this is doing is it's bringing in people from overseas to come to Perth. They obviously get established, and after 2 years, more often than not, they stay there because it is a major city and continue their lifestyle. So what I'm trying to say is the demand has been significant and there is no sign of letting up at the moment. The market is just, it's consistently strong and we don't see that ending in the short to medium term. So, sorry, Sachin, was there another slide?
No, that's it.
So look, in a nutshell, guys, Content Living is one of the builders. The other builder we work with is 101 Constructions. So the whole idea of this session was if you are looking in Perth, if you have, questions about it and want to have a discussion, we can take it offline, have a chat with you. work with your goals and objectives, and find you something, right? Because the reality is, if I put up 10 house and land packages today, by Saturday, they'd be gone. That's just how hot the market is, right? So let's have a chat. Let's discuss if you are keen. And we can source land wherever land is available in Perth and work within their time constraints and yours, of course, and find you something. So please do let me know if you have any questions, and I'll pass it over to Sachin. I believe there are a few questions in the chat, which we will get to as well.
Yeah. So I think everybody listening, you know, I finish off all the time. Every time I finish off, I talk like this. It's about building your portfolio, buying properties to increase your wealth, because that is an asset class that you must invest in. And I think a lot of you listening today, nobody would say no if I said to you, why wouldn't you buy a property at prices, 2 years ago, for example, or even 1 year ago, or in that situation. But normally when I used to say that, I used to say, would you buy, if I gave you prices 5 years ago, 10 years ago, would you say no to buying a property? Obviously, everybody would say yes. That's a silly question. But the important thing is you must accumulate properties as soon as you can. You must be flexible in your investment options as well to see where you can take advantage of the property market and where you're going to get your biggest bang for your buck. Because sticking to one city is definitely not the best strategy sometimes. And we have for a number of years now been very successful in actually picking the right place at the right time for our investors, and that's what we specialize in. So nearly 3 years ago, we went to Adelaide and did house and land packages there when the prices were 500,000, and actually 480.
480, yeah.
When that went up by 120, 130,000, we decided, well, it was Perth, and of course before that it was Brisbane, and we were selling quite a lot in Brisbane at about 3-4 years ago, when the prices were about 450. So the important thing is identifying those opportunities and then taking advantage of it. But you need to be aware of those markets. And we know a lot of people who went and bought in Melbourne for the last 5-6 years. And there were a lot of not so good stories about the pace of growth in Melbourne. And we have to date not focused on Melbourne at all for those reasons. We just didn't think it was a bad market, but we thought there were better markets than Melbourne to be investing in. So we still think that Perth right now is the best market for house and land to invest in, very closely followed by Brisbane.
Brisbane, yeah.
In that price range. So in that price range. Okay.
Correct.
So I think if you have $1 million and your house is paid off, you can't retire. Because if interest rates where they are now don't give you much for your $1 million, unless you've got alternative investments. So you can't retire on $30,000 or $40,000, particularly if interest rates go down again to those sort of rates. Okay, I'll stop there and I'll take questions. Thank you.
No problem. Okay. First question is from iPhone. Isn't the Perth market mining based? What makes you think the Perth market won't go back?
Yep.
So I think touched
Good.
on that with supply and demand, but good question.
Who's the question from?
iPhone doesn't have a name.
Okay,
but that's okay.
That's okay. Listen, good question, and I think it's a good question for everyone's benefit, really, because when I look back in the last 42 years that I've been here, there are two markets in Australia where people were looking at boom and bust, and one was Perth, and the other one was Gold Coast. Okay, and for very different reasons. Now, Perth has experienced the investment in mining. Okay, the investment in mining was driven by billions and billions of dollars of investment in mining was driven by China's demand. So mines could not, they had to double and triple their production to be able to meet the demand from China. And so instead of shipping something to China, say once every week, they had to start shipping pretty much every day. So this type of demand caused a mining investment, which caused a massive boom. Massive boom meaning, not a chef, but a kitchen hand was getting $100,000 a year. A truck driver was getting $200,000 a year. So everybody from all over Australia was moving to Western Australia to double and triple their salaries. Now, that type of boom and bust is over now for Perth. And the main reason for that, as I said, is the different industries that are coming in and the significant number of people that are migrating to that city. The migration is coming from Southeast Asia. The migration is coming from the African countries, South Africa being one of the big ones. And also there is the migration has happened from interstate in Australia as well. So I don't believe that there's going to be another bust in the Perth market with the chronic shortage of properties that, compared to the demand over the coming 3, 5, 10 years. The housing crisis will not be solved. There's a lot of builders in Perth that have gone under, probably in percentage terms more than any other state in Australia. And, at the end of the day, that has not also been a city where there is a lot of apartments. In fact, probably the fewest apartments in any city in Australia. So people go for house and land. There is not enough land to go around. And that supply and demand issue is going to prop up prices. And you soon are going to see $1 million for the average house price in Perth. I don't know whether that's going to happen in 3 years or 5 years, but it's going to definitely happen.
No, thanks for that.
The other thing I will say to everyone, and this is not just for Perth, but I'll say this to everyone, is that interest rates. So you have the backdrop already about the supply and demand. I've said it about 20 times today. And that equation is not going to change in the next 1, 2, 3, 5 years. It's not going to change. It might get slightly better, but not change. So on that backdrop, if I said to you that interest rates are going to start falling from February, right? And interest rates don't just fall for 1 quarter. There is potential next year to see a 4 in front of interest rates, not 6. And if that happens, then you know that that's going to be the massive catalyst to push the housing prices up even further. So whether it is Perth or anywhere else, that is still true. But where you're going to get the biggest bang for your buck, I stand fast in saying at the moment, you have to be very selective where you buy. Perth house and land, no-brainer. Brisbane house and land, no-brainer. Sydney, you have to be very selective what you buy. Okay, but the equation is the same everywhere. So whether something goes up 6% next year or 20%, I would say Perth has a big chance of that 20% in front of it. And some place like Sydney maybe won't be double digits. I'll take the next question. Thank you.
Perfect. Thanks, Sachin. So there has been a couple of questions about the market. Lots of analysts are saying Perth is at its peak. Is it the right time to enter? So you've answered that. So we've answered why the Perth market will be still in a position of growth in the next few years, we believe. So that's been answered, which is great. Now, next question, why do we buyers agents not sell home and land packages? Why do they sell finished properties? How is the strategy different?
Listen, we concentrate all our efforts in new properties and off the plan properties. And there's a number of reasons why we do that. Okay. And don't necessarily concentrate much in that second-hand market. One is that we work directly with developers everywhere we go and home builders. and apartment developers, obviously. And we value pick. We value pick what we sell. So I give you an example. In Sydney, there are at least 25 apartment projects we can be selling to you. And we signed up with everybody. We signed up with Meriton. We can sell you any Meriton in Australia. But where do we concentrate our efforts? We concentrate our efforts primarily in products where we would buy ourselves. In other words, we see where you're going to get the biggest bang for your buck. Okay. So that is key to us. And we work towards those ethics. And Krish and Raj and others in our team listening will tell you that that is what we do. So when the prices get to, so in the apartment space, for example, we concentrate on pre-sales. Once the pre-sales are done, and the prices have gone up 50 to 100,000, we walk away from that project and we go to the next one where you're going to get a bigger bang for your buck in terms of property prices going up. So I give you an example. We're selling at Tallawong when the prices were 650 to 700. Now those properties are getting settled as we speak. And the prices are now starting, 2 bedrooms are starting from 830, 840. So we stopped selling at Tallawong almost a year ago when the prices were up to 750. And we went and found another project where they needed pre-sales. So this is what we specialize in. We go and source the best property for you in Perth. We go and source the best property we can for you in Brisbane. And that's what we do. So our specialization is in that space. So we can't be all things to all people. Buyers agents have their space, and of course, I mean, if we had another hour, I can go through the pros and cons of buying a second-hand property versus a new property, but more than happy to take that offline if anybody wants to go through that in more detail.
Perfect. Thanks, Sachin. There's still a couple more questions about the Perth market. Self-proclaimed experts are saying there's too much heat in the Perth market and we've already missed the bus. As Sachin mentioned, no, we haven't missed the bus. There's still scope for growth there, definitely, because of the supply and demand equation. Now, from NK, is it still a good idea to rent in Sydney and buy a property? So rent vest, basically. So rent in Sydney and buy in Perth.
Oh, absolutely. I mean, investing is a new concept. It's even in the same city, you can be renting in near the city if you like to live in the city. And we know a few people who do that, but they can't afford to buy there, so they buy in the suburbs. So listen, it's about, if you're a first time buyer, it's about getting, and we do a lot of one-on-ones with people and talk them through their objectives in the property market. And we can't meet all the objectives, but if your objective is to be in the property market and make a quick buck in the property market, then you've got to find the best property for you that will make you, that give you the entry to the property market, but also give you that quick buck. Okay. Property, by the way, is not share market. It's a long-term game. So when I make predictions and say, you expect to make 100,000 on this in the next 12 months, I say that, but I also caution that with, you've got to do your own research and don't hold my word to it. But fortunately, over the number of years that I've been doing this, 9 times out of 10, we have had success with what we have said. So predictions have come true. But no, red advancing is something that I have nothing against, and I think we know a lot of people who we've spoken to over the years who have bought their first property interstate. And done extremely well out of it.
Correct. No, thanks for that, Sachin. So there's been a couple of people asking about the Melbourne property market. So what's your view on the Melbourne market, which is down at the moment? Do you see it bouncing back? And is there an opportunity for investors to put money there?
Good question.
Yeah.
Good question. Listen, there's a few things I don't like about Melbourne, and one is the fact that the government keeps putting new taxes on property.
Mm.
Given the health of the economy in Victoria, I would not be surprised if they slap them with more costs and more taxes on the properties. So that is certainly a deterrent. As far as property, as far as population growth goes, Melbourne is second to none. I mean, they also are having population growth. So at some point you will find that, some of these property values are going to actually increase. It has to, right? It has to increase. But the question is, if you have money to invest, which would be your best pick in Australia at the moment?
Mm.
Melbourne would not rate in my top three.
Mm.
Okay, would not, definitely not, won't rate in my top three.
Mm.
So I might leave that one at that, because it's definitely, making the right choices is very important.
Mm.
We have some apartment projects in Sydney where we would definitely rate them much higher than any purchase you might do in Melbourne.
Melbourne, yeah.
We can source properties there. We work with developers there, but we don't push it.
No.
We don't push it. Absolutely not push it. I mean, another very hot market apart from Perth at the moment is Gold Coast market. So the Gold Coast market is not going to come. It's not going to be a boom and bust anytime ever again, right? And the reason for that is that there is significant demand post-COVID, massive demand for people to bring forward their retirement, buy properties there, move there, or buy properties there to move in later. And there is a huge, huge shortage of properties in Gold Coast as well compared to the demand. And that has caused property prices there to jump 25% as well. In isolation, as a state, in the state, you saw about a 16% jump, but that part of the state has had massive increases in property prices, and that will continue as well as more people look for a better place to retire or to buy a property.
Yep, perfect. Now, there is a question here. So Melbourne has been answered. A couple of people have asked that. I've been in Sydney since 2020 and not been able to get my hands on my first property. What do you guide for good schools? That's my only perimeter I have. Okay.
You want to buy somewhere where there is good schools in Sydney? There's a lot of good schools all over Sydney.
I
That's a good
believe
question.
the person has left. I can see on the chat he's actually left, UJ. So that's
Okay.
a good. Well, yeah, that's fine. We'll leave that. Now,
Yeah, I mean, on that point, good schools and sought after schools increase the price of the suburb. There's no question about it. We've seen it in Sydney for many, 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 many years. Okay. So a recent example is the Ponds area, and there may be some people who live near Ponds. The school there is very, very sought after because I think 60% of the population in Ponds from the subcontinent, and their kids have increased the standard of those schools, and now those schools are very sought after. So people are moving to that. Schofield is another example. So these places, Wentworthville is another example. So these schools are actually doing well because the kids going there have increased the standard of the school, and then the price of the properties there go up because people want to be in the boundary. Cherrybrook is another good example of that, actually. Cherrybrook Technology School being a public school. Okay, I will leave it at that.
perfect. iPhone's got a question. Is it better to buy in established areas or growing areas? I think there's pros and cons to both from my point of view. And what we can do, iPhone, is we can have a chat offline afterwards and sit down and because you've got a
Yeah,
few questions I
listen,
can
it
see.
depends.
Yeah.
It's a good question. It depends
Good
on your
question.
budget. Of
Mm.
course, established areas have no more land, and they are going to always keep going up in value. Why do people not buy in established areas? Is because they can't afford it. So that's the next best thing, right? So if you're living in Sydney, for example, and hey, if you can buy within 10 kilometers of the city radius, then wonderful, because those prices are gonna keep holding. But be selective again, because not every suburb goes up as. So talk to us, and we can guide you.
Mm.
But people are looking for more space. they would move out and go further. But you know, even the outer suburbs now, some of the suburbs are, you know, challenging the prices of the traditional high value suburbs. So as an example, you know, Bella Vista is a good example probably of a suburb that is right up there now. Average house price of around $4 million for a house in Bella Vista. We recently sold a penthouse in Norwest, a top floor penthouse, which is off the plan for $6.2 million, which is obviously a record in this area. But people sometimes want to live where so it's pushing. There's a number of factors that are pushing prices up, and it comes down to affordability. So, which is why people moved out to Marsden Park and Schofields and these areas when they could get a house and land there for 900,000, and now they're sitting on properties which are worth anywhere between 1.3 and 1.6 million, and so on and so forth. So it comes down to affordability, but new areas also enjoy a growth because of infrastructure coming in, like the metro has had a good impact on that. Okay.
No, thank you for that. All right, AJ had a question. I really want to invest in Perth. I got an investment property in Melbourne. I can just recover my cost bought in 2021. Shall I sell that and buy Perth? That sort of question, I reckon, AJ, we'd love to chat with you offline and have a chat and discuss.
Yeah, definitely, AJ. Would be happy to have a one-on-one. Of course, we don't charge, and guide our listeners. I mean, we're here to guide you and provide the you know, the different options and assist you through your journey. So feel free to be in touch with Krish or myself.
Yep, I've just put my number there, AJ. Just send me a text or a WhatsApp, and then me, you, and Sachin, we can sit down and go through it. Done. Perfect. Thanks, AJ. Awesome. And I believe that was the last question. Guys, if anyone wants to shout out and ask any... No problem, AJ. Thank you. If anybody has any questions, and as I always say, there's no such thing as a silly question, fire them away. You like to connect to iPhone, no problem. Just my number's at the chat. Just give me a buzz or send me a WhatsApp or a message. I'll get in touch with you and we'll book a session with Sachin. No problem.
Definitely.
All right. I think that's it. If anyone's got any questions, my number's there in the chat. Just call me and we will we'll go through it. And thank you.
Listen, I think in concluding, and we talked about Perth a lot today, but in concluding, I would like to iterate what we're dealing with probably one of the largest home builders in Perth, and a couple of other really big builders there, and the message is very strong from them. I mean, they have even come to us and said, listen, just pay a deposit on any land. Just pay a deposit on any land, and in 6 months' time, you find that it's gone up by 50K. In 12 months' time, you're going to be sitting on 100K. I mean, you don't take those things at face value, but what they're trying to say is the market is just so hot that
They've never seen anything like it.
they can't see this stopping. And what I would say to my listeners is, do your research, come and talk to us. Have you know have a view, and have the discussion and make a more informed decision where you're going to buy. Okay,
100%. But no, thank you all. I know it's late on a rainy, cold evening, but look, thank you all for attending, and please get in touch with me. My number's in the chat if you want to book one-on-ones, and we can go from there. Thank you so much. Oh, thank you for your kind words, Lai. Appreciate that.
Thanks, Lai. Thanks for attending.
Thank you, guys.
Thank you, AJ. Thank you, Gary.
Thank you, everyone.
Cheers, everyone. Cheers.
Have a lovely evening. Take care all. Thanks, Lenny.